Welcome all to the Illinois Incentives webinar sponsored by StraightUp Solar. We're really glad that you could join us for this. My name is Kai Ajayi and I'm going to be walking you through the webinar today. At StraightUp Solar, we honestly believe that creating a path to clean energy and therefore a sustainable economy is the way to honor our values and to provide a healthy and shared future for everyone. To that end, we have registered as we are certified as a benefits corporation or a B Corp. We must report on concrete steps that we take to create a sustainable business, to support our workers, our customers, our suppliers, the community, the environment, so that all of our efforts and activities lead towards the best possible outcomes for people and planet. Obviously, we need to make a profit. The goal of our profit is to improve the environment and make people's lives better, including our workers and our customers. So I hope you'll see these values reflected through the course of this presentation and in all the work that we do for you and others. So we were founded in 2006 by an MD who was horrified by some of the coal mining practices that he saw. And he decided then and there to dedicate his private life to the improvement of the environment while he helped people with his medical degree. Since 2006, we've won numerous group buy programs in Illinois and Missouri. We've installed over 1,300 solar arrays. We are a member of the Amicus Solar Cooperative, which is a group of like-minded solar installers and other manufacturers and so on. And right now we have over 75 employees. A quarter of us are NABCEP certified, which means that we know what we're talking about. And we are a certified Tesla Powerwall installer, as well as an REC premium installer. All of our work comes with a 10-year workmanship and production warranty on the residential side, because we want our customers to have peace of mind and understand that we stand behind all of our products and all of our services. Finally, our values, I've alluded to those a couple of times. We call them our clear values. We put our community first. We lead the solar tribe, those people who go solar with us and who are solar around the world, through education on solar issues, through advocacy for solar policy. We respect people and planet in all that we do, and we strive for excellence in every avenue of our business. And again, all of these values should become clear to you, not just in this presentation, but in all the work that we do. So let's get down to it. My name is Kai, as I've told you before. I'm going to be walking you through this webinar. I've received the moniker Kai the Solar Guy, and I was a professor in a previous life, so sometimes they call me Professor Kai the Solar Guy, a la Bill Nye, the science guy. Anyway, I have a background in political science. I have a master's degree in poli-sci. International relations is my focus. I've been the business manager for a teleradiology firm. I've worked as an environmental consultant, and now I'm so pleased to be working with StraightUp Solar and helping consumers and businesses reduce their carbon footprint, go solar, save money, help the planet. So let's move into the actual webinar. This is an overview of what we're going to talk about today. We'll start off with the federal investment tax credit and how that can be monetized. We'll talk about the solar renewable energy credits that are available in Illinois. I'll walk you through a couple of case studies, and then we'll have plenty of time for a Q&A session at the end. So let's start with the FITC. It was 30% in 2019. It's now 26% this year. It goes down to 22% in 2021, and then it goes away completely on the residential side in 2022. So if you plan to go solar, you've got till the end of this year to maximize your potential savings with a 26% credit before it drops to 22. Now, this is a 1-for-1 non-refundable tax credit against your liability. I know that's a mouthful. Bottom line is it means that you need to have some type of tax appetite in order to take advantage of the credit. I'm going to walk you through an example in a minute to illustrate this tax appetite piece. But let me cover a couple of other contingencies. If you have a need to, for example, shore up your roof in order to get solar, then those costs for reinforcing your roof can be added to the total cost that you apply for the 26% credit for. So for example, if the array is a $20,000 array and roof reinforcement is an additional $5,000, then the total you can apply for it at the tax credit will be $25,000. So it's not just the cost of the array. Any other improvements that you need to do that are necessary for the installation of the solar array can be added to the total cost for the array. Now, the key is necessary for. So if you need a new roof, for example, you don't need a new roof in order to support the array. You need a new roof because you don't want a hole in your roof. You don't want leaks in your house. So getting a new roof may not necessarily qualify as necessary for the installation of the array. The other contingency is that the owner of the home must be the same as the taxpayer. In other words, if me, Kai Ajayi, wanted a solar array at 123 Main Street, I must be the owner of 123 Main Street in order to qualify for the tax credit. Okay, let's walk through this example. Jack and Jill have W-2 income of $75,000. That's what they make in the course of a year. And their deductions, they have no children, so they get the standard deduction for a married couple. They have some minor charitable deductions. So for the sake of argument, their total deductions are $25,000. So their taxable income is $50,000. They're in the tax bracket of 20%. Again, for the sake of argument and easy math. So their tax liability is $10,000. What does that mean? Come April 15th, when they have to pay their taxes, they need to make sure that that $10,000 is covered somehow. Now, if they had a solar system installed that year and it cost $20,000, well, they get a 26% tax credit of $5,200, which means their new tax liability is $4,800. So come April 15th, the amount of tax that they would owe is $4,800. So what does this mean for you as a taxpayer? So I'm going to take off my StraightUp Solar hat right now and put on my taxpayer hat. I am not a tax professional. What I'm doing here is just giving you an example to try to illustrate how this might work. Please consult with your own tax professionals to find out whether you can monetize this tax credit. But here's an illustrative example. We just talked about Jack and Jill. They're really smart. At the beginning of the year, they knew what their yearly income was going to be. And they knew that their deductions were likely to be about $25,000. So they each arranged with their employers to have an amount withheld from their checks every month so that at the end of the year, they would have had about $10,000 withheld from their checks. What does this mean come April 15? Their tax liability was $10,000. They had $10,000 withheld over the course of the year, so they don't have to write a check to Uncle Sam for anything, and they don't expect any money back. Their entire tax liability has been covered through their withholding. But they installed a solar array during the course of the year. So they have a tax credit of $5,200, which means that their new tax liability is $4,800. But they've had $10,000 withheld over the course of the year. So April 15, they get a check back from the government for $5,200, the amount of the tax credit. In this case, they had $10,000 worth of tax appetite to take advantage of the tax credit. Now, let's say Jack and Jill, they didn't believe in giving the government a tax-free loan for a year. So they said to their employer, withhold nothing from my check. At the end of the year, I will pay the $10,000. So what Jack and Jill do in this case is they drop a certain amount, 1/12 of $10,000 into a bank account over the course of a year. And after a year, they have $10,000 plus interest. that they can use towards paying this liability. Again, they bought the solar system, so they have a credit of $5,200. So their new liability is $4,800. They've got $10,000 in the bank to pay their taxes, but they only have to send a check now for $4,800. They get to keep that $5,200 in the bank. Now, if for some reason their tax liability was, say, $3,000, so they even though they have a $5,200 credit, they can't use it all in year one. Well, they could take that $3,000 liability or $3,000 tax credit in year one and transfer or defer the remaining $2,200 to the next year. In other words, for this credit, you can take it in year one, and any amount that you can't use, you can roll over one more year. So that's it for the federal investment tax credit complex. Two things to remember, or three things. Number one, you need the tax appetite. Number two, any ancillary work that you need to conduct in order to get your solar array installed. The costs for that can be added to the total cost, and 26% applied to that. And number three, the homeowner and the taxpayer must be the same person. Okay. Next, we have the Illinois Solar Renewable Energy Credits, or SRECs. So FEJA, the Future Energy Jobs Act, established this SREC program in 2016. Earlier, the utilities had been required through the Renewable Portfolio Standard to get to 25% of renewable energy by the year 2025. There's no way for the utilities to do that on their own. So what they've started doing is to purchase the renewable energy from folks like you who install solar arrays and claim that production as part of the utilities production. So if you have a 10 kW system that produces 15,000 kilowatt hours a year, the utility, and you're an Ameren customer, Ameren gets to say those 15,000 kilowatt hours were produced by Ameren, and look how great we are because we're helping the environment. They were produced on your roof, and you're going to get the renewable energy credits for it. Ameren gets to take the public credit for it, if you will. So let's walk through the mechanism a little bit. What is an SREC? One solar renewable energy credit is the same as 1 megawatt hour of production by your array. And for every megawatt hour or 1,000 kilowatt hours that your array produces, you're going to get paid $81.70 under the current Illinois block program, Block 2. So contracts are for 15 years. So you have 10 SRECs a year, 15 years of SREC production, that's 150 SRECs roughly. So the amount your array is going to produce is estimated over that 15 years. The amount of SRECs are calculated, and you get that money in one check if your system is under 10 kW. The approved vendor with whom we work is Carbon Solutions Group. They aggregate all the RECs together and sell them to the Illinois Commerce Commission. And then Carbon Solution gets paid and distributes those funds to you. So let's look at an example. This is a real example that was built in central Illinois. It's a 7.7 kilowatt DC system. And the production of this system was about 8 RECs per year. So over the 15 years, that's 120 RECs. 120 RECs times $81.70 comes to $9,727. Now there's a bond, which is about 5% of the total amount. So let's just call it $700 for easy math. That amount is withheld by Carbon Solutions Group. The point being this, or the reason being this: if your system underproduces and doesn't make as many RECs as you've been paid for, then Carbon Solutions Group will go to that bond and withdraw from it to make up the difference. One of the advantages of working with a company like StraightUp Solar is that we are very, very accurate in our analysis of what the production of your system is likely to be. In fact, we are sometimes conservative to make sure that you do not fall into the underproduction level and that you receive your full SRECs and your bond is not reduced. Assuming that your system produces all that it's been expected to over the course of the 15 years, at the end of year 15, you get that bond back. So in the case of this client, they get approximately $9,000 up front. And then year 16, they'll get that $727 back. Let me point out, this SREC money is considered taxable income. So both the state and the federal government will come looking for their share of this pie. Just an FYI. Okay, let's look at a couple of examples now. The first one is the Voss family. This was done in 2019, so you'll see the FITC is about 30%. But we installed a 5.36 kWDC system for them. It cost just over $16,500, so about $3.10 a watt. The federal tax credit was a hair under $5,000. As I said, it was 30% back in 2019. The SREC value was just over $3,700. So you add the two incentives together, the federal tax credit and the SRECs, and you subtract that from the system price, the net out-of-pocket cost for the Voss family was just a smidgen under $8,000. The energy that they're going to save with this array over 25 years is $32,052. And if you take the yearly savings from the array and divide the total cost by that savings, their payback period is under 8.5 years. So this is to show you that a solar array can and will pay for itself. With the incentives that are available, you can see that it's a very attractive proposition. We have another case study of a slightly larger array. This is a 10.5 kW DC system. It costs $31,500, $3 a watt. Now this was this year, so the tax credit was 26%, and that came out to just under $8,200. Very rich SRECs. It's a larger system than the smaller one we just discussed. So almost $14,500 in SREC incentive money. So add that SREC money to the federal tax credit and subtract that from the system price. You're looking at just under $8,900 total system cost. Again, if we look at their savings over 25 years from their electricity bill, almost $52,000. And again, divide that yearly energy saving into the total cost, you've got a payback of under 6 years. Very, very attractive proposition to go solar. Not only from a financial perspective, as is clear here, there is an environmental benefit that cannot be ignored, and your ongoing electricity savings are nothing to sneeze at. So we'll take some time now to go over some of the questions that you may have come up with during the course of this webinar. I'm always available to chat with you one-on-one, 15 minutes or more as necessary, so we can review your particular situation. I can give you the information that you can take to your tax professional to find out if you can monetize the federal tax credit. We can discuss what sort of SREC we anticipate your system will qualify you for. And we can generally talk about whether solar is right for you. My email address is on the screen, as is my telephone number. You can always go to our website and get more information. I hope you found this webinar to be instructive and informative. Really appreciate you taking time out of your day to listen. If you have any questions, please do get in touch, and we'll look forward to seeing you when the sun shines. Thank you very much.